billion. Adjusted free cash flow, 4.7 billion is the guide for free cash flow.
That's the full year 2025 revenue.
That's 2025's revenue is their guide for free cash flow. Karp says demand for sovereign AI has been unleashed, highlighting 149% U.S. commercial revenue growth and stating Palantir is uniquely positioned to convert AI capabilities into measurable economic value for customers. Their rule of 40 is now 155%. U.S. commercial remaining deal value is up 124% year over year to 6.23 billion. TCV is up 50% year over year, 3.37 billion. They also closed a record U.S. commercial TCV of 2.1 billion, up 153% year over year. I mean, these are pretty staggering results. Let me pull up a little bit more coverage right here, and then we'll get deeper into the numbers.
Let's get to Seema Modi with those numbers. Seema. Melissa, Palantir's second quarter earnings coming in well above Wall Street consensus, 41 cents adjusted for the second quarter versus the 35-cent estimate. Revenue topping expectations, 1.94 billion, driven in part by its U.S. commercial business, which grew nearly 150% year over year. So that's a higher growth rate than the prior quarter. The defense tech company also raising its full year guidance really across the board. CEO Alex Karp doubling down on his criticism of Anthropic and OpenAI, and in our exclusive interview with the CEO, who said, "We have people trying to drug addict us to a future they believe they control." He adds that he spent a lot of time with Dario Amodei, that's the CEO of Anthropic, and they want to tell you we have to work into a future where we own nothing, where our businesses aren't profitable, where none of us have jobs, where our adversaries win. He says Palantir and our allies are guiding into a future where you have growth and jobs. Separately, Melissa, in a letter to shareholders, Karp says a global movement is emerging and that organizations are awakening to the risks of handing the creators of the language models their keys to the institutions. Bottom line, he's saying this pivot to open source is happening under this whole debate around AI sovereignty. The company is benefiting with that partnership, Melissa, with NVIDIA, with that commercial business revenue increasing again, nearly 150% year over year. You'll have more of my exclusive interview with Alex Karp coming up at 5 p.m. Eastern.
Yeah, and what a pop in the stock after hours in the back of these results. Seema, thank you.
These numbers are fucking crazy, guys. These numbers. It's a little crazy.
Oh, you remember how Arnie said that, well, we didn't get that many announcements, during the quarter. They still closed 3.4 billion in contract value, which is, a record high, of course, insane. But the even more insane number is the U.S. commercial remaining deal value, 6.3 billion in remaining deal value. It is insane. A lot of, booked revenue for the future, assuming all the options play out as well.
Okay, guys,
Farzad
presentation is up.
Farzad, thanks for the super chat. He says, being a Palantir investor is the best. Why did I do this earlier? Thanks a bit for the investment buy. Should I sell my Tesla? I don't know if you should sell your Tesla or not, but the one thing that Palantir is doing that, Tesla hasn't really been able to tap into for the past couple of years is grow, right? This market is really looking for serious growth. Every company is held to a higher standard in the age of AI for growth, and they're doing it. And so the stock has been kind of stuck all year, even with massive growth. At some point, you can't hold down something that's just said they're going to grow 93%. If they're going to grow 93%, I think that extra 7% is coming, folks. I think we're going to see triple-digit growth on them this year. And if that happens, once again, those EPS estimates continue to go up, and the multiple compresses if the stock stays flat. Arnie, I'm pulling up your screen right now. Or did you send it to me? Okay, you sent it to me. I can pull it up in mind. Okay, cool. We got the letter in a second that I will read. Stocks up 8% after hours. Rule of 40, again, 155%. The only companies ahead of them, folks, are Micron, SK Hynix, CXMT, and Samsung. Literally the only companies on planet Earth that have a better rule of 40 than Palantir, which looks at your revenue growth and your operating cash flow, are the companies that are in the greatest supply-demand imbalance we've seen in the history of humanity when it comes from memory. Even NVIDIA is lower than Palantir. So you talk about
the only one looking at those lines as sort of targets that the company has. Have you noticed how in the previous quarters they put a line underscoring, okay, this is the rule of 80, bam, smashed. This is the rule of 120, bam, smashed. 160 is almost there now.
almost there. I mean, this is incredible. Again, these are numbers
Net
that
dollar
cannot be
retention.
ignored. Go ahead, Amir.
157 net dollar retention. So increased yet again in another, sequential quarter. Like they just keep moving up.
What
and
was
up
it
with the
last
net
quarter?
dollar
Do you remember?
retention. Yeah, 150. So
Wow.
already insanely high, and then just keeps going.
Wow. Financials, again, we looked at these numbers, but top line numbers, pretty freaking unbelievable. GAAP earnings, 41 cents. They did $1 billion of net income, guy. They did 1.94 billion of revenue. 1.06 billion of that revenue aimed to the bottom line. I mean, this is just not something you see that easily in any company, not even just software companies. Operating margins, 47%. Rule of 40, again, 155. US revenue growth, 115%. I think there will be some questions about international growth as, there's been a lot more media coverage that's not been the friendliest towards Palantir across the seas. And I think Karp will just be like, look, they can say whatever they want. Look at how we're growing in the US. This is where all the money is. Eventually we will grow more internationally, but you can't deny that where AI is starting, which is the US, is where they're getting all the growth. And that's leading to more opportunities for the business. Operating income was 62%, 1.2 billion of adjusted operating income. Their margins of 62%. Commercial customer count of 35% that Palantir has held themselves to for so many years. And now we're seeing it work out.
Yeah, that one's kind of like a double-edged sword, right? On one hand, you're having this amazing growth with just these few customers. I mean, 1,000 customers is nothing, Salesforce, 200,000. So they're able to put up these results with just so few customers. So imagine what it will look like when that customer count actually accelerates. And when you see the net dollar retention, you realize, oh my God, like each customer they add just keeps scaling massively. So I mean, that really gives some confidence in the growth ahead for this company. Like if they can scale current customers this much and grow this much with only 1K customers, like imagine once that like starts accelerating as well in line with the rest of the business.
Which is why the analyst estimates for future growth being so discounted, like 40%, 30%. I mean, dude, if they actually double customer count, which is not going to be hard to do, the more customers realize OpenAI and Anthropic aren't really giving them any value, and they have their margins and they're able to charge the penny that they charge because of the value they're providing, there is a long trajectory, a runway of growth. One of the biggest issues with the semiconductor trade is that, are these companies cyclical? Can they sustain the type of growth they're having when the CapEx slows down? CapEx or no CapEx, Palantir is going to win. And I think that's something that should be given a premium to as well, that we might see the street wrap their minds around.
Something that pops to my mind is if you compare the deals slide between these two quarters, the number of deals is quite similar. 220 this quarter, 206 last quarter, but the number of deals that are at least 10 million is 73 against 47. So not only there are more deals, but already the deals are getting fatter.
9.2 billion in cash. They have plenty of cash for whatever they're going to need to do. That's a war chest of cash that will probably be valuable for anything in the future if they need the cash for it. 4.7 billion of free cash flow, again, raising the guide by about 500 million. Commercial revenue growing 134%. Adjusted income 4.897 billion. I mean, just again, unbelievable numbers. Karp's going to be on CNBC very soon with an exclusive interview. And so we will go to him. For those asking about share buybacks or dividends, first of all, Palantir doesn't pay a dividend. They're not at that stage of a company where I would want a dividend as a shareholder because they're growing 93%. Number two is Trump forced all defense contractors to stop their buybacks last year or early this year. So Palantir filed in their 8K like 3 months ago that they're not doing their buybacks anymore. So they bought back like $200 million of stock, but they're not buying back anymore. Okay, the letter. Let's get through it. This is one of the coolest parts about being a Palantir investor. There's a philosophy behind this business, and Karp spent some time to explain that philosophy. So let's get into it. August 3rd, 2026. A global movement is emerging. The revolution for independence and AI sovereignty is now well underway. Every organization in the world is awakening to the risks of handing the creators of the language models the keys to their institutions, of letting those models loose within their homes. The demand from our partners is clear. It is for control over data, the prompts that the models ingest, and more fundamentally, the organizational and business intelligence, their alpha, that the language labs are not ready and willing, but structurally designed to capture from their customers. The models have grown and thrived by essentially ingesting the entire written work product of our civilization. And those models, as well as their creators, now have their sights set on global industry. We have been the beneficiaries of the revolt that is underway against submission to this way of working. Our customers have declined to become vassal states of the language labs, and the market is now shifting dramatically underfoot. Our business is compounding at a rate and a scale that we have never before witnessed. We generated 1.9 billion in revenue for the second quarter of the year, another record in our company's 2 decades of operations, reflecting a 93% growth rate over the same period the year before. Our entire business nearly doubled in the span of 12 months, and our recordly revenue has been accompanied by yet another record in quarterly profits. We generated 1.1 billion in profit in the second quarter of the year, an astonishing level of proceeds that for many on the outside and even to some internally would have been unthinkable only a few years ago. Put simply, we have generated more profit in a single quarter than we did in total revenue in the same year before. And the core of our business in the United States continues to expand at an unrelenting and breakneck pace. We generated a record 1.6 billion in revenue for the second quarter in the United States, representing a 115% increase over the same period last year. We generated a record 764 million in the US commercial revenue this quarter, a 149% year-over-year increase. Such an achievement would be cause for astonishment in any business. For one of our size, scale, and consequence, it is simply staggering. On a quarter-by-quarter basis, our US commercial business grew 28%. Such growth, indeed such acceleration, gives the impression that what others might require a year or even longer to achieve, we can do in 90 days. And it must be noted that we have achieved these results with a minuscule and shrinking sales headcount, another way in which we have discarded our conventional wisdom in favor of our own unique path. While our other US commercial business is on fire, we believe it is nonetheless just nascent. So once again, they're putting up these numbers with a very small sales force, which speaks to the value that the customers are getting, which is why they're paying for the company. The model of our business is straightforward. We are paid and have always aspired to be paid as a derivative of value creation. Our results represent a subset of the economic value that our software has created for our customers. We do not get paid for clicks or tokens or chats. The gamification of the most significant development in modern economic history seems to us misplaced. The usage of a platform may hint at its value, but is by no means dispositive. And many are now finding out that the consumption and usage alone often have little or nothing to do with the production for results. There are Marxist overtones and undertones to our business. Others, including many of those building large language models, intend knowingly or otherwise to capture the means of production for their purported partners. The limitations and faults of the token industrial complex, which has threatened to overtake and dominate the world economy, have increasingly been exposed. Stocks up 12% after hours. We have always declined and will continue to decline, entering into a parasitic relationship with our partners. It is true that our approach has diverged sharply from the market in this regard, and yet we are one of the few companies in the technology industry that is fully aligned with its customers. Sincerely, Alex Karp, co-founder and CEO of Palantir. I mean, yeah, the token industrial complex, we reject that. We're actually bringing value.
And I think, doubling down on the whole, we create value for you first, and then you pay us a lot of money. Like, I remember he challenged a lot of firms. I think it was like an AIP con one, like the previous one, where he said like, yeah, why do all these software companies want to be paid first and then like deliver the value or pretend to? He's always taken the stance that, yeah, we are down from value creation. First, we give you value and then you pay us. And I think that's like giving a lot of confidence into this whole, token maxing narrative that's going on, that like, no, we're actually the ones that will be providing the value to the market here.
Yeah, I mean, again, Arnie, your thoughts?
No, I also liked the token industrial complex word and the other sentence, the minuscule and shrinking headcount. And these numbers with this sentence, it's quite weird to match. Like the business almost doubling, same headcount, even shrinking. That's crazy.
Arnie is about to go on another vacation.
So guys, before looking at it, how much do you think share count grew year over year? Outstanding shares for this quarter.
2%. I'll say 2%.
What about you, Arnie? What do you say?
30%.
0.2% dilution year over year.
No
0.2%. Guys, like...
Yes, because the stock has dropped So some diluted shares are not included in the number.
Yeah,
does
but
that work?
but theoretically, they would issue more shares if it drops, right? Well, no, technically that's the opposite.
No.
Yeah. Oh, yeah, you're right. No, that's a good point, Arnie. But that is, however, that is still a substantial decline from what we've usually seen, which is about 2.5%, right?
No, the thing is, there are some options that I think are still around, mostly from the management, that can be counted in the diluted number of shares only if the stock exceeds the strike. I think, and since the stock has dropped, that's why there are no new shares counted in
That's
that
fair.
side.
That's a fair point.
Because maybe there were some options that were included in the numbers when the stock was up and that are not included anymore now. That's my guess.
So with the past three quarters, Q4 1.8%, last quarter 0.7, this quarter 0.2. So like in Q4, wasn't the stock like still pretty elevated, and they still like cut dilution like massively? So I don't know. I just think that the whole Palantir is diluting their shareholder base to oblivion while Carp buys another mansion or some new ranch. Like I think that narrative is pretty dead right about now.
Palantir flies. Sorry, Alex Karpov flies with a plane.
Yeah, they're very like, oh my God, Carp, look at his jet expenses. I'm like, yeah, look at the contract value each quarter, bro. Like, what are you talking about?
Well, the other, in the context of Burry, if you've read his report is like Palantir is not an AI company because they don't make an LLM. And it was so funny because it's like, that's the point. That's why they should be valuable, because they don't spend money on CapEx for an LLM that China can make by distilling and using 1/10 of the CapEx, right? So it's one of those things where it's like, no, the value should be going to a company actually helping customers make sense of AI. OpenAI and Anthropic started to hire all these forward deployed engineers. It's like, if you don't have a culture of actually forward deploying software, you're not, because your whole business is token consumption, it's going to be a fundamental cultural misalignment, which is what Karp talks about at the beginning of his letter. And I think the street's going to recognize that eventually. The numbers are there for the street to recognize it. Now it's just this like boogeyman of Anthropic's going to kill all these companies. That narrative has to die out. And I think more and more with the open source models, it's starting to die out. And as long as that continues to shift, then I think the value comes right back to Palantir and the software layer in general.
Do we realize that now gradually we are approaching the growth rates that made these big models huge?
Yeah. I mean, those growth rates are now.
And the thing is, all the revenues that Palantir gets are recurring, while what I'm seeing from these AI frontier models is that now the numbers are huge, but they're huge due to a combination of the prices being very high, even stupidly high compared with open source alternatives, multiplied by a token maxing philosophy that made the volumes that generate these revenues more inflated. So it's like the numbers exploded, yes, but all two dynamics are structurally fragile.
No, I agree. And again, the sustainability of AI's revenues are really important. Like the cloud company's sustainable revenue. Some of these random bottleneck companies that help build the GPU, how sustainable is it? What if NVIDIA innovates something where they don't need your vendors anymore? The models, how sustainable is it in a world in which theoretically a lot of that revenue might be fake and not real? And you've already looked at the growth rates starting to plateau. They're still pretty big for Anthropic and OpenAI, but they're not at the levels they were at the hockey sticks last year. And now they have more competition as the Chinese models come online. So once again, it seems like companies that can sustainably generate the type of growth that's needed are what we're seeing right here with Palantir.
All right, fellas, I think we have some time before the call, so let's just go through the charts that we do have. Like I've been hard at work here, so I've been so quiet. I think a lot of people like, to visualize things. So 63%, and the trajectory is pretty clear here in the adjusted free cash flow. But looking at operating and income margins, like, I didn't update this for the quarter, but you can see like steadily approaching that 60% mark that is up here for, both net income and for the operating margins. And then if we look at our little fella revenue, 93% year-over-year growth, approaching that 2 billion. And, AIP launched, here, and then you can just see this, exponential growth. US commercial, 150% year-over-year. US government, which is, Arnie asked me like, okay, us during this live stream, like, what's the one thing that the street is not, paying attention to? I think government. Look at year-over-year on government, like 80%. Like, it's not only US commercial. Government is growing a lot, and it's not only US government. Like, look at non-US government is like in the 40 plus range. Now it's a bit more lumpy than, just up in a straight line accelerating every quarter, but like we're still growing like 40 to 50% in non-US government. And the one thing that we've been all bearish about, that Carp always says, like, Europe doesn't want to play ball, like 2 quarters in a row of over like 25% growth in international, US, non-US commercial, so international commercial revenue. And that used to be like 3%, negative 5 to, as you can see, since they went public, Q1 2022, it's been pretty flat. That's why they always say, like, yeah, like Europe does not want to play ball. Now we have 2 quarters in a row of over 25% growth in international commercial. So I think that is pretty massive as well. But I want to look at this as well, as Arnie mentioned when we look at it, the deal breakdown. Like, in terms of absolute terms, 220 is not, such a big increase over, 206, 204 that we've had, like the recent tops. But look at this golden one here, 73. Like, so black is 1 to 5 million, blue is 5 to 10, and then this golden one is over 10 million. It could be 100 million, 500 million, 11 million, oh, basically over 10. 73, like they are doing some massive deals now. Remaining deal value, US commercial grew 123%, over 6 billion in remaining deal value in US commercial. Remaining performance obligations, almost up to that 5 billion. And this is basically all commercial. Most of government contracts, they don't qualify for RPO, due to how it's set up. So you can see this as a proxy for commercial. Like, look at what has happened these past quarters. Like, the jump that you see is just insane, and this is just, a commercial proxy. So just some initial charts, like looking insane here as we go through the rest of the numbers as well. But yeah, I mean, dilution is down, growth is up, like everything, margins are expanding. Um, yeah, everything you want to see in a company. Like, what is bad about this quarter? I can't find a single like bearish thing. Like, SPC went up a bit, but that's just sales and marketing. Like, guess they've been doing a lot of events. I don't know. Like, Amit is expensive to fly out, but besides that, I don't know. Like,
Dude, first of all, I've paid for every single flight and hotel that I've ever gone to at a Palantir event, so they're definitely not spending the money on me. But it's like, I mean, the operating margins once again at 47%. It is unconceivable that they're doing this with the amount of money that it takes to actually manage an enterprise in this age of AI. But part of it is because of the low headcount, and it's very hard to get a job at Palantir. But it's because if you get a job, you're gonna have to produce. Cheryl, thank you for the super chat. Amit, you and the guys helped me grow conviction and ride this down to $6 and back. Thanks to you, Arnie and Amir. Great to see you together again. Cheryl, thank you so much. There are many people that have been part of this journey for the past 4 years, and at $6, it was. You could see the potential of what Palantir could become, but the numbers were so awful that it was hard to actually think they would come to fruition. And this is Palantir is like one of the top 10 companies that's talked about every single day, and it has been for the past 2 years. And now they've got the growth to continue to accelerate why they're talked about so much. So it's been a hell of a journey, and we're really seeing the market start to recognize that as well. Which I think also brings up some context, right? Obviously, the stock is down from the highs at 200, but in a bull market, everything gets up to a certain level, and then it needs to materialize. 140 from $6 over 3 years is a pretty exceptional return that's beating the market. And the good thing about that is many individual, regular people like all of us have the opportunity to participate. And again, the multiple's been high on this company for a while because the secret got out by 2024 and people realized, okay, Palantir is the real thing. And the multiple has always been aggressive. But every quarter they kept putting up the earnings that would get you to A, justify the multiple, and then B, if the stock tanked, the multiple, or the stock stayed the same, the multiple would go down so dramatically that the dip would get bought up. And I think over time we'll see it back to all-time highs as the growth continues to compound.
Do you think the stock deserves to get back at the 200?
Yeah.
I mean, remember that after the earnings in October, there was a pump to 230, something like that, and then bam, opened down. But now, I would say the numbers look quite different from October.
I think it's more macro than Palantir related. My answer is yes, but you got to have a really exciting macro to help make that happen. And maybe we get there by the end of the year. But
the macro, the narrative, I personally think the chip trade is a bit saturated, overcrowded as of today. I think the market is craving to rotate into the new story and to, okay, you're spending all this much, but show me the value. And Palantir, as far as I know, as far as I see, is the only true place where a software delivers value. Like, think of competitors. We've been studying this company for so long, and the biggest competitor is Visions.
In France?
we are not even hearing anymore about Databricks. I think it's doing well, but nobody.
They're on their. No, Databricks is scared to go public because they just did a Series M financing. They know that if they go public and they have to be judged with a scorecard every day and deal with the manipulation and algos and short sellers, like it's not easy, you know?
I can imagine Databricks is willing to play the card of we are the Palantir killer in the same way Rivian was supposed to be the Tesla killer or that kind. But the issue is, unless you have numbers that look at least alike or can look alike Palantir, there is simply no reason to get shares of Databricks rather than just click by Palantir.
Yeah.
Well, I mentioned this a while back, actually, after the CNBC, Karp, when he mentioned about the, free cash flow in 2 years. So I remodeled the company with that in mind. And I reached a fair value of, 330, 340, that kind of range, which is, 165% from where it's currently trading. And that sounds completely insane. Like, what do you mean fair value 340? But the thing is, after people read it, I said, just read my research coverage and then rebuke it if you want, like criticize it. But first read it and then look at the number. Like, don't just, blindly say, oh, 165% upside, my bum. Like, no way. Like, no, just read it, look at the numbers and look at what Karp is saying, and then tell me if you still think it's unreasonable. I haven't heard a single person refute my article on that. Like, no one can disagree, like, after they read it. So I think, like, the company should be well past 200 here. Like, with what the company is doing, the trajectory of it, like when you start to extrapolate that, over the next 10 years, bring it back to present value. I mean, I think the stock should be trading in the 300s here. Like not joking. And I was called the biggest Palantir bear. Like when we used to do the Palantir weeklies, I'm like, company looks overvalued here. And everyone called me a bear, and now I'm like called like a blind bull. Like, no, I just look at the numbers, I do my own forecasting, my own modeling, and this is what I came up with. And even though it sounds crazy, as I mentioned, when you actually look at the numbers, it doesn't look that crazy anymore. So that's all I'm saying. For people that are skeptical about where Palantir is heading, if they deserve 200, 300, just try to value it yourself. Like, just give it a go. And then get back to us if you think it's unreasonable. I don't think that you will reach that conclusion after you actually sit down and look at the numbers.
Speaking of bears, let's hear someone who used to be one of the bigger bears on Wall Street, Louis De Palma, on Palantir.
Give us your take on this line of business.
Definitely. There are two closely followed metrics with Palantir. One, as you referenced, is the US commercial growth acceleration. The second metric is a more forward-looking indicator. It's the total deal value of bookings with US commercial, and that also accelerated to what I believe is 158% from 47% last quarter. And the reason there's such a huge focus is because of competition from Anthropic and OpenAI. I believe on the last segment you were